What's up, Tesla family? It's Ray J back with another video. And in this one, I want to talk about Kathy Wood's $2,000 price target on Tesla and some big news that came out during the week that suggests that we are on the right track of getting there. But just know that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention an 8.1% APY on uninvested cash. The offer ends very soon in just a couple of weeks. Anyways, now let's talk about what's happening with the markets. So, what's happening with the market and Tesla, at least moving forward? As you guys can tell, Tesla's continuing to rip to new highs. Now, the question is, why is Tesla pushing like this? And one of the reasons is because we started off with all these bullish price targets from different analysts. For example, Daiwa Capital Markets has raised their price target on Tesla to about $420 per share from the $285 rating. And then we also had about multiple of these Morgan Stanley analysts and then JP Morgan Chase analysts and a bunch of them were all coming out and being very, very bullish on Tesla. So we're seeing a bunch of analysts coming out over and over and over again. We had Fubon Securities giving Tesla a $472 price target, and the list goes on with all these 400 plus targets that keep on coming out. But it just seems to me like what's happening is Tesla's just running and running and running. And now Wall Street is playing a game of catch up as now these analysts are changing their targets to even more bullish levels, raising the ceilings higher and higher as Tesla continues to rip. But the question is, why on earth am I still very bullish on Tesla? What is really driving this run? And the answer is the Robo taxi, FSD, and factors just like that. The reason for that is because whether or not Tesla continues to run is very dependent on that. Now, Tesla knows something very important. So do many of these different analysts. And this is what Kathy Wood has been talking about. Tesla's price target hitting around $2,000 or so over the next couple of years is going to be very dependent on some factors, such as whether or not they end up releasing some kind of robotaxi over the next couple of years. Now, Tesla has announced that reports suggest that during the first half of 2025, they could be announcing the release of their official robotaxi, could be once again entering the streets. And then for mass production, that could take a little bit longer, but we're getting very close to those developments and those releases. Now, that's going to be a very, very big driver of Tesla's revenue, but it all hinges upon that. Now, in order for this to really run, we need to see the robotaxi be announced, and we need to see Tesla get closer and closer to autonomy to eventually achieve that. And that's why the share price is running like crazy. That's the main thing that's fueling this. Now, what's helping this is this news right over here. And I did talk about this yesterday about how the Trump administration suggests that they could be eliminating a crash reporting rule, which was opposed by Tesla and backed by Elon Musk. I just want to make that very, very clear. Once again, Musk may be opposing the rule as well. He's just backing Tesla. That's what they mean by backed by Tesla and Elon Musk. He's the one that is in favor of what on earth is going on right now when it comes to these regulatory changes that could be happening under the new administration. So I did talk about this in my video from yesterday, and I just want to make it very clear that right now, if there's ever a crash that happens using autonomous technology or any autonomous driving assistance, it has to be reported to the NHTSA. But the problem is it could be argued that they don't really report data comprehensively. And what I mean by that is they have a tendency of just screaming, oh, there was 1,000 crashes involving Tesla users that were using FSD, and like that's it, or 1,500 crashes or whatever. But the problem with doing it like that is it doesn't give you the comprehensive picture. It just paints the narrative that FSD is not safe and that's it. Whereas the truth is FSD could be very, very useful. I think it's a work in progress. It's not necessarily perfect, but it's getting safer as the days go on. And it is still relatively safe, I would say, because the reason I say that is because there's a lot of safety features that allow for like braking, identifying pedestrians, stopping at particular lights, and the list goes on. But the way to do this is very simple. And this is my solution. Report everything. Everything should be reported by Tesla, in my opinion. They should tell people that, hey, FSD was used for 1,000,000 miles. And out of those 1,000,000 miles that it was used on these trips, there were only so many accidents, right? There's only one accident per how many thousands of miles, for example, right? That's just the example I'm coming up with. They also should report how often it's used, how many days per year is there going to be in accidents, and then compare it to when humans are driving. When a human is driving a million miles, how many accidents are there? Now, I'm not going to do all the research in this video. I may save that for another video, but I just want to say that that's how I think the data should be reported. So simply screaming that there's crashes, it does not really give us the full comprehensive picture, because every car company has to report crashes. They have crashes that happen, and simply painting crashes like that without kind of like comparing the data, providing more details about how often a crash happens, that's going to be a very, very inefficient way of kind of reporting things, in my opinion. So that's what I would say is the criticism of the NHTSA. Now, maybe Tesla could try to negotiate with them or talk to them about that, but that I'm not too sure about. And these regulatory changes that could be happening, they're not confirmed yet. If they do happen, that's still going to be very, very big news. But the reason why it's so big is because, in essence, okay, Tesla is finally keeping their word about FSD. It took years and years and years for us to get there, to get autonomous driving technology. This seemed like a fantasy many, many, many years ago, when people were just in complete denial of the technology. But nowadays, we're getting closer and closer to making it a reality, and we're getting more and more proof to back up that claim. Right? Under the next administration, there's going to be less stringent regulations, which gives Tesla a bigger edge at getting things approved. Now, the question remains, and at least this is what my view is: can things remain as safe as possible in doing that? Yes, I believe things can be very safe because of the safety features that Tesla is going to be incorporating, but we're not quite there. We're not fully autonomous, so there is still some risk in driving, using Tesla's FSD beta. So that's the reason why I think it's very important for Tesla to disclose the fact that it's not perfect, they're not fully autonomous, and they have to make it very clear to their users to avoid confusion and any controversy. So that's the very important thing. But anyways, going into the future, here's the thing. Here's what's going to happen over the next couple of years. Tesla's going to continue to develop their FSD using their Dojo supercomputer, taking all the data together. And then once they improve the different features that are made, the robots are going to get smarter and smarter at identifying things, identifying particular cones, getting past a lot of different barriers. I did see some reports that showed that there were certain types of cones that FSD could sometimes miss. And sometimes there could be like reports of like phantom braking that sometimes happens. It's not perfect, right? They're still working on it, of course, but it's going to get better as the years go on. So I believe that we're going to hit a point where FSD and using these fully automated vehicles with AI are going to be much safer than human drivers. I do believe it's going to happen one day. We're slowly getting there. So the transition to get there is what is kind of tricky. And that's the reason why Tesla greatly benefits from having less regulation, as regulations are going to be lifted a lot more under the next administration. So, not trying to be too political, and I say that, I think, good and bad from pretty much every administration that I've seen in my lifetime. But I just want to say this is bullish for Tesla. That's the unbiased view. It's very, very bullish for Tesla, because with these regulatory changes, it gets us closer and closer and closer to the big picture of us unveiling the robotaxi, it coming out, getting all the approvals it needs. And then this is going to generate so much more revenue for Tesla. I think Kathy Wood kind of she kind of broke this down in the more bearish outcome, right? If Tesla does not achieve, well, the first thing is, if they don't achieve FSD, the share price is going to be worth like, $350, $400, like around there, over the next couple of years. Apparently, that's just based off their sales growth, and that's it. But if you account for AI, for example, let's just say that Tesla does end up achieving their overall goals of achieving a robotaxi. They announce it, they have FSD coming out, their cars are autonomous, and they start generating hundreds of billions in revenue because of that, because of their ride share plans. And then what else there's the possibilities are endless with AI. If they start getting hundreds of billions more in revenue from that, in addition to hundreds of billions from their EV sales, that could easily bring the share price up to about the 1.4 thousand mark by 2027, depending on the timing in which they announce and like release their fully self-driving technology. The bullish case, Kathy Wood sees it at about 2,500 a share, and then in the middle, it's expected to be around $2,000 a share by 2027. I agree. We are going to hit $2,000 a share. I really believe that. This doesn't even account for like Optimus and stuff. But the problem is, it depends on how quick we get this technology out there. How quick do we get this AI-driven technology? How quick does Tesla end up announcing that they have this robotaxi that's now on the streets? It's driving. It's self-driving. It's generating lots of revenue, billions of dollars in revenue. And then how fast is it going to be for them to announce they're fully autonomous? That's going to be what kind of dictates how long it takes for us to get to $2,000 a share. Whether it's a couple of years from now or another decade, it all depends on that. Otherwise, I'm still very, very bullish nonetheless. And I'm just trying to say this. I believe we're going to get there, guys. I believe we're going to achieve fully self-driving technology. I believe Tesla will hit the thousands per share. I'm very confident we're going to get there. But the problem is, I don't know about the timing. I don't know how long it's going to take. That's why, as a long-term investor, I like to just hold my Tesla shares, give it time to grow, and there's going to be so much wealth to be built because of that. But that's not financial advice when I say that. Why is Tesla so bullish? Because we're getting closer to the dream. The dream is coming true, and Tesla's achieving this technology that gives their cars brains who are able to think just like how humans think. As crazy as that sounds, right? It's becoming a reality. And under the next administration, it's going to make things easier for them to get approvals and such. I would say approvals will be less stringent, and that's going to greatly benefit Tesla. That's why investors are very excited about that. That's why this next administration, despite the EV tax cuts, the EV tax credits kind of being um, slowed down and such, despite that being stopped, Elon Musk knows that EV sales are not going to be the bigger thing for Tesla. He believes it's going to be their AI technology and their autonomous driving. So that's why like it offsets that with the amount of approvals that are going to be made and how quickly Tesla gets all of that out there. So if you look at Kathy Wood's chart, for example, you guys could see they're estimating that if we do end up getting all of these things that are coming out on the lower end, these vehicle sales could get Tesla about 346 billion in revenue, whereas autonomous driving alone could generate over 200 billion or more in the more bearish case. In the more bullish case, we could even see autonomous driving surpass their sales overall in terms of their car sales. That could also happen because of how big this market's going to be. It's a multi-trillion-dollar market. Automated driving is going to be massive, absolutely massive, and Tesla's just getting its share of the pie. And Tesla's ahead of its competitors, so it's going to get a massive share to start things off, which is what's going to generate so much revenue, hundreds of billions, if not trillions, eventually for Tesla overall. So that's my view, guys. Okay, Tesla has a product that's becoming a reality. Their claims about their full self-driving technology is getting more and more real, and now they have something to really back up their claims. Under the next administration, approvals are going to be easier, and that's what's really getting investors hyped up. And it's going to be very, very big as time goes on. But you guys know what my view is. I still believe that Tesla needs to report everything involving FSD, and I believe they're willing to do that. I did see them go over all the numbers in a call before during one of their earnings calls. So just report everything. Let us know how many miles is are they basically going to be using their technology, their autonomous technology? How many miles will it be driven per? How many miles will there be an accident? If everything's reported like that, it'll give you a much more comprehensive picture. And then if you compare that to like any other car company, you'll see how much better or worse FSD is in the current time. In the future, I believe the FSD numbers will be like way better as time goes on, but we'll see as time goes on, right? I'm just here to be very unbiased when I say these things. And once again, as time goes on, I really believe that this technology is going to be absolutely world changing. It's going to transform the world. And Tesla's going to expand its technology, not just in the US, but in China and other countries. It's going to be growing and it's going to be so huge. I'm very excited for this future. So it's going to be massive, and this is going to cause insane growth. So that's one factor. Then you also have Optimus. You have all these other things Tesla's developing. It's absolutely wild. So I'm very, very bullish for the long term. I think Tesla will surpass $2,000 a share. But like I said before, I do not know about the timing. If it's going to be a couple of years, if it's going to be like a decade, we'll see about that depending on how fast Tesla gets things approved and how fast they develop this technology. All right. Thank you all so much for listening. Have a good rest of your day, and I'll see you guys tomorrow on the next one. Thank you for listening, and peace out.